Good afternoon, Robert Scribbler. It is June 13th, 2018. Now, for this segment, what I'm going to do is provide you with a bit of analysis about the present state of Tesla and more particularly the present state of Tesla investments, and particularly short investments in Tesla. And we're going to ask the question, will Tesla shorts be unwittingly duped into becoming clean energy investors? And this is a good question because over the past year, Tesla shorts have been involved in a mass campaign to publicly flog Tesla stock. You can find a plethora of Tesla shorts, for example, on the website Seeking Alpha, and you will find numerous negative reports from these shorts, self-serving negative reports, I might add, and often these reports are quite distorted. Over the past year, shorts have fed on a frenzy due to, at first, a slower than expected Model 3 production ramp. But during recent months, Model 3 production has significantly ramped, and it looks like we might see as many as 30,000 Model 3s produced during the second quarter of 2018. And as a result, investors are starting to feel a bit more confident in Tesla's ability to mass produce electrical vehicles, and shorts are starting to feel a bit of a squeeze. Over the past week, over the past 1 to 2 weeks, we've seen a significant rise in Tesla stock from around $280 per share to above $340 per share. And this ramping stock value has resulted in approximately $2 billion in losses in mark-to-market values for Tesla short holders who presently hold about $12 billion in Tesla shares. Now, the way a short works is you make a bet that the stock is going to go down. You take a loan to buy the stock at the present price, and then later decide to pay back the loan on the then present stock value. So what ends up happening is if the stock goes down, you can make some money, but if the stock goes up, you can lose quite a bit. And so what will happen if Tesla stock continues to stay high or continues to rise is that these short positions, they don't last forever, and they'll get called, and eventually they'll have to buy back the loans. And if the value of the stock is high, then they end up losing money. And the net effect is that Tesla stock will tend to ramp up considerably. Now, this will also have the effect of taking money from short sellers and investing it in Tesla. And so Tesla itself could stand to profit considerably depending on how high the margin is between the initial cost that the short sellers bought the stock at and the new price. So if Tesla's value goes up by, say, 30% versus the average short sale value, then Tesla will get a boost of approximately $3 to $4 billion. So it's a rational question to ask, will Tesla shorts end up being forced to invest in this all-clean energy giant? Now, we had talked a bit about the Model 3 production rate, and it does appear that Model 3 is on track to hit close to 5,000 electrical vehicles produced per week during this month. And this is due to the fact that Tesla now has 3 Model 3 production lines, and they are becoming increasingly efficient and they are increasingly producing more and more electrical vehicles. Now, the other piece that may involve a short squeeze is Tesla profitability. So Elon Musk has stated that he wants Tesla to be profitable in the third and fourth quarter of 2018. And he has produced a number of strategies, one of which is the high rate Model 3 production and high margins on Model 3s. And the other thing is reducing internal costs. And Elon Musk has gone through a number of internal cost reducing measures. Recently this week, they laid off 9% of their workforce. This sounds a bit worse from the employment standpoint than it really is. What Tesla has done is they've hired a load of people over recent months, and what it appears now is that they're cutting middle management, and Tesla needed a large number of middle managers to help fuel their explosive growth in Model 3 production and in other segments during 2018. But now it appears that they're more looking at optimization of efficiency, and they're laying off some of these administrative workers. And so in the end, if Tesla can achieve both higher rates of Model 3 production and apparently high profit margins on Model 3s, and the recent Model 3 breakdown found that it cost only $28,000 to produce the long-range Model 3, which implies a rather high margin on pretty much all the long-range Model 3s, and a rather lower cost to produce the $35,000 version once it does come out. And if Tesla is able to get control of its internal costs, then it also appears likely that it will achieve profitability in the second half of 2018. If those two things happen, expect the shorts to get milked again. Tesla milked the shorts back in 2012, and it appears to be setting up to do the same thing in 2018. So Tesla shorts, thanks for investing in clean energy.